All right. Good morning. Good morning. Good morning. Monday, April 6th. We got just about 2 minutes until the U.S. cash open. Markets have been pretty steady overnight. We drifted down, we drifted up, but now we're back right in the value area from yesterday, right at the top of it. POC from Friday was 610. We're currently trading at 624. So just above the value area. All right, we'll see what today's auction gives us. We got news coming out today at 10 a.m. The ISM Manufacturing Index will get a little injection of volatility probably for that news event. First news release of the week. I don't suspect institutions are going to be very quick to trade this morning. They'll wait for the first news release. They'll kind of be testing the water, seeing what everyone else is doing a little bit. So we're going to be patient. We're going to allow the auction to tell us what it wants to do this morning, and we'll engage if necessary. Generally, I don't like to start trading till at least 9:45 to let the opening auction volatility settle down. But with the news release at 10 o'clock this morning, I would highly doubt that I would try to squeeze in a trade between like 9:47 and 9:55, because you'll see the volume start to drastically diminish leading into that news release. So again, just being patient. We're going to let the auction tell us what it wants to do today. We're not going to force our will upon the market. We don't have any bias coming into the market today. We're not looking for just longs. We're not just looking for just shorts or anything like that. We're going to let the auction tell us what it wants to do. And here we go, ladies and gentlemen. We are off to the races. Okay, open auction. Let's see what kind of volumes we get within the first minute. That'll kind of tell us what to expect for the day. I would suspect that we're going to be over 15,000 contracts within the first minute today. I'm not sure how all nations treat Easter. I believe some nations do celebrate Easter on Monday. But again, US is open for business today. And all the volume generally comes from firms located within the United States. So it should be okay to trade today. Yep, already over 10,000 contracts for the first minute. So that's good. Pretty decent rotations. Price opened at 621, just about. So right here. Looks like price open and just shot up from the open. Pretty decent rotations, getting a good amount of volume added up here at 634. Value area is centered now around 629, 630 in that area. Let's zoom in on the absorptions and see if buyers or sellers get aggressive this morning. But again, I don't suspect that institutions are going to be aggressive before the news release at 10 o'clock. So it's our job just to be patient, just to wait, see how this auction develops a little bit. I mean, you can already see that the rotations are kind of slowing up here, up to 632. All right, the market's not adding the amount of volume that it probably wants to add. We had 12,000 contracts within the first minute. That's pretty decent. I think Friday was about 15,000. So volumes could be a little lighter. It's Monday. Everyone's testing the waters a little bit. They're waiting for this first news release to come out. So you're seeing flashes of divergence on the sell side. Nothing is holding at the moment. Again, these are pretty slow rotations up here at 632. All right, we're struggling to add volume. Rotations are slowing down. I don't suspect we're going to be staying in this area very long. All right, it's gaining a little more volume, a little quicker rotations as we start to move down the 627s. $5,800 contracts transacted in the second minute. Not bad. It's not great either. Now you see as we dropped there, we picked up in the rotations, picked up a little speed. All right, we had sellers stepping in up here at 632. We saw the flashes of the divergence. So it looks like participants are accepting a little bit of lower price right now. The value area again from yesterday was centered around 610. That was a POC from Friday. All right, this is the opening gambit from the week and just testing the waters. seeing where the buyers and where the sellers are, where all the liquidity is. This market is just hunting for it. Really no hard set divergences yet. I mean, we saw the sellers stepping in here up in the 632, 633s. We'll see if they step in again. Again, as you're getting up here, the rotations are slowing a little bit. Right? Not a ton of volume being transacted here. Probably had more activity at the lows than you did at the highs. There's enough here to keep price up here. But again, let's just be patient. We got to wait for this 10 o'clock news item to come out before we really start engaging and really start thinking about taking positions. These rotations are slow. For this early in the trading session, these rotations are pretty slow. We're not adding a ton of volume up here. Could it be that people don't like this price? Could be, but it also could just be the fact that it's Monday. People are taking their time. They're waiting for the news release to come out. You're testing the waters a little bit. You buy a little bit, see if the sellers push back, so on and so forth. Mondays typically are my least favorite day to trade just because there is so much uncertainty going in, and institutions are very hesitant to take positions until some of the news releases come out or until they get some clarity of what's going to occur throughout the rest of the week. In my experience, Mondays tend not to be a trendy day, tend to be more balanced in nature. And then you see the trends start happening on Tuesday and Wednesday, and then into Thursday, and then settle down by Friday as institutions exit their positions. So these rotations are decent. You've picked up a little bit of a volume here. It's not bad. You're going to extend these highs a little bit. You're also not breaking the highs very hard, right? You're not getting the fast rotations and then the snap up. You're just extending the range of the distribution a little bit. You're adding a little bit more volume. Rotations are picking up a little bit. You had some buyers step in here down towards value, and they seem to be holding it, or at least they're trying to. But it's still too early in the sessions to make too much out of that. And also that this is occurring in value does not mean much. You get a lot of absorption within value. And so once you start seeing absorption outside of value, that's more reliable information. So you see, you get the sellers to step in right back in value as well. All right, we picked up some volume up here in the 640s, but it wasn't enough to hold price. Now we're back down in value where there's more liquidity. Rotations are picking up. You're getting a little more speed in the volume. All right, now going back to the lows where we saw some volume building earlier. All right, so based off what we've seen off these rotations so far and the speed of the market, it seems that lower prices are more accessible than higher prices. Yeah, we added some volume up at 640, but the climb here from 635 to like the 639s was kind of slow, very slow rotations. And see how we're getting a little more pickup in the rotation, the speed volume down here at 622s. Right, you're going to extend this range down a little bit. There's enough volume being built here that the market is also going to test just beyond this, right? If we have value, we have liquidity here at 622. Let's check 621, 620, 619 and see if there's liquidity there as well. And there seems to be. And you got the flashes of divergence that sellers for a second were willing to try to hold price down and step in with some limit orders. But again, we are only 7 minutes into the trading session. There's a lot of noise within generally the first 15 minutes of an auction like this. So while we articulate what it is that we are seeing, we don't wait too heavily on future trading decisions just yet. Right, we got to allow 945 to kind of come around, let the opening auction settle down a little bit, and then we'll go from there. But again, with this news release at 10 o'clock this morning, I don't suspect I'm going to be overly aggressive between like 9:45 and say 9:55, 5 minutes before that news release comes out. Just going to be patient. It's Monday. Brand new week. And now we're just working our way back into value. See a lot of noise here in the opening auction. We're testing up, we're testing down, we're going back into value. All right, and the value area here is set to 68%, right? We want some statistical significance in our value ranges. And 68% generally represents one standard deviation away from the mean of the distribution, which is also kind of the POC. So 630 is your mean. And you're building a little more. See, we don't have much farther to go here to drag this value area down, right? If we keep adding more volume down here, this POC is going to drop in there. Now you have the POC dropped. We're dragging the value area lower, which tells us again, but we also saw that with the rotations. As we rotated up here into 636s, the rotations got slow, the volume addition got slow, came back into value, then we tested the lows, and there was a little bit more volume build here at the lows. But again, opening auction, the market's going to go back and forth and test these areas. Okay, is there liquidity left up here? Is there liquidity left down here? Let's go back and forth until we wrap up and conclude business. The volumes on ES look to be a little light this morning. We're looking at about 20 to 30 contracts on each side. Generally, you're north of 30 and somewhere around 50 typically. So yeah, volumes are a little light at the moment. Over the 1 minute spans, not bad. We had, again, 12,000 contracts in the opening minute, and now we're looking anywhere between 5 to 7,200 contracts per minute. It's not a bad rate. Once you start seeing things dip below 2,000 per minute, that's when things get fuzzy because the market's going to move away from that area. So we had buyers step in here again in value, trying to hold price near the mean. And then you had the seller step in right after that. But again, you're within value. We're within the opening auction. This is all expected. There's going to be absorption on both sides. That's going to tell you absolutely nothing. All right, this is a pretty big low volume area here within value. I generally would like to see faster rotations and more volume being built here if this was a good sustainable value area. But these rotations are slow, and it's 940. And these rotations are slow. It's somewhat decent volume, but I mean, it's not going to be enough to hold prices here all day. So more flashes of divergence on the sell side, right? Right on the top of that, we've been seeing this all morning. In this 630s area, sellers step in. All right, they allowed the drift higher, got a little bit better of a price on their fill, and then just dropped it. Right, they were happy to transact at 630 on the sell side, right? Plenty willing to offer 630s, and then they got offered 640s, and they jumped on it and then shot the price lower. All right, and so it looks like they're still happy to offer 630s here and fill up these buys. And you see how when the market rotates up, you're not really getting a ton of contracts added each time. That's pretty indicative of a topped market. Right? You're not adding a ton of contracts here. Right? As the market shoots up a little bit and fills in some of those limit orders, it's those subsequent rotations up that we're paying attention to. Right? As you go back up, are you able to fill a bunch of contracts, right? Per rotation, is it 20 contracts? Is it 5 contracts? Is it 50 contracts? If you get 50 contracts added per rotation, that's pretty liquid. Is once it gets sub 20, that's when you're like, okay, there doesn't seem to be a lot of business to be had up here. And again, you're repeatedly seeing the seller stepping in here at 630, right at the top of the value area. Is that to say we can't jump? We absolutely can jump up here, right? We actually had pretty good rotations up here in the 641, 642. It was slow in here in 638. But once we got up to 640s, there was signs of liquidity. Is this high probably good? Probably not. I do suspect that we'll revisit it at some time today. But at the moment, I don't actually think either the low or the high is good, right? I don't think we've set the definitive range for the day. I do suspect the market is going to balance today, is not going to trend, is not going to go off in one direction with any sort of velocity and speed. and that this may be a good trading environment for us because we like these rotations back into value. We like trading out of value and looking for the trades back into value. That's where the probabilities are. Trading anywhere in here in this blue value area tends to be very low probability because you get a lot of chop. Market just moves back and forth trying to fill in liquidity. Is there anyone left up here? Anyone left down here? And it's just going to go back and forth, back and forth. It's once you get out into these extremes on the distribution, when you start to see the lack of activity, the slowed rotations, the slow volume builds, that's when you start taking trades, right? Because it shows a lack of interest in an area that is statistically significant, right? There's not a lot of volume being built here. If this market is meant to facilitate trade and facilitate liquidity, here is the liquid part, here is the illiquid part. You want to trade from illiquid back to liquid. That's edge. It's 9:45. Like, we're kind of clear to trade. If we wanted to pull the trigger, right, we're kind of in that time frame now where we would want to pull the trigger. But because it's Monday, because we have a pretty good news release coming in at 10 o'clock this morning, we're just going to be patient. We're just going to wait for that to clear. All right, we'll give it until like 10:02, 10:03. See if there's any sudden volatility injections into the market when the news release comes out, and we go from there. We don't trade the news, and we don't trade through the news. We have very slowed rotations up here, very slow. I mean, you just so hard to add volume up here, right? If we're farther away, if we're seeing these rotations and this volume being built somewhere up here in the 640s and 638s, I'm 100% jumping in on that trade. And maybe as I'm saying this out loud, the market is just going to give me exactly what it is that I'm looking for, and it's going to tempt me before the news release. All right, you're getting a little injection of liquidity here. The rotation speed up. The volume starts to speed up a little bit. All right, you're getting some decent contracts being built here. All right, kind of looks like we're going to be testing up here in a little bit. All right, there's enough volume being built here that we can make that case that there could be more liquidity up here. If there's plenty of liquidity right here, you should maybe test 636 and 637 to see if there's liquidity there as well. All right, but if I'm a buyer right now, I don't want to just keep on buying and just keep on shooting up the price and get worse. So here comes the test higher, right? We saw that there was a build of liquidity here. We're talking about this potentially being a short area if we start to see the slowed rotations, right? The rotations are quicking up. We're starting to see a better volume build here. All right, this is too much volume being built at the moment for us to be really taking a short, right? We just added about 40 contracts there at 638.5 on a couple rotations. All right, now you're getting more rotational build. All right, you want this ledge to be a little more clean. We can see there's a little dip here, there's a little dip here. It's okay for it not to be perfect, but the cleaner it gets, the better it is for the idea that the auction is now complete, right? This is just like a ledge. We had only like 1 or 2 rotations up here in the 642, and we're able to add this much volume on the single rotations. So I would like to see us rotate up it here again, test it again, and then prove to me that there's no one interested in doing business right here. We continue to see the flashes of the sell divergence, right? And they didn't even allow the price to get up. We just didn't get up there. And this was a somewhat slow volume build. Was it enough for us to take a trade? No, we didn't see it. And again, we're also under a little bit of a time constraint here with this whole like, oh, we need to get a trade in between now and 9:55. Like, that's not a very wide trade window. Do a vast majority of my trades conclude within that time frame? Yes, they do. But I don't want to rush it to put it in and hope that we get to our target before all the volume dries up before the news release. And that's typically what you happen. People just pull all the limit orders as the news approaches because they don't want to be caught in the volatility. All right, look how slow the volume is here. This is so slow. This was after 10 o'clock. I'm 100% taking this trade. 100%, right? We see the divergence on the sell side. We have the slowed rotations. We have the slow volume builds. We're out of value. We know that value was built here earlier with pretty good rotations and good speed, right? This is very high probability, other than the fact that you have a news release coming out very shortly here and you don't want to be front running it. But there's a strong chance that this market now goes down here, right? We're testing higher. We're testing the upper part of the range, and we're not finding much here. There's not a ton of liquidity here. And as this market rotates down, right, which it is likely to do, not to say it can't just rotate up here and test these highs again, right? But we've seen sellers stepping in. We saw the slow rotations. You're seeing the slow volume build. You're seeing the market being unable to rotate out of value. Everything about this auction right now is telling you that you should probably be short, but we're not taking the short trade again because we now have a news release coming out. And I suspect as we get closer to this news release, the volumes on ES are going to dry up on each side. And you already see that. We're down towards low 20s on the volumes on each side of the book. That's pretty low. And this will continue to drop as we get closer to 10 o'clock. But again, slowed rotations, you pop up, you can't really add that many contracts on the way down. You're adding more contracts, getting more flashes of the sell divergence. And it is these times that you seriously just want to like hit something, right? Because the market is telling you like, hey, this looks like a very good high probability trade. Is it certain? No, but it's very high probability. It's just now you have this one thing that if you're disciplined is holding you back, and that is the news release. On mornings where the news release is at 10 o'clock, yeah, it's kind of annoying. You have to sit here and you just watch the opening auction for 30 minutes. You have a pretty good idea of where things are going, but you can't trade it because you have that news. Discipline. You stick to your plan. All right. We're seeing some signs of the divergence on the buy side here within value. Right. But again, in value, you'll get absorption on both sides pretty easily because there's liquidity here. Participants just input the limit order right below where the market is and they get their fill. It's not a defending of a position. It's just, hey, there's liquidity here. I can use a limit order, right? Because sometimes you get very bad fills on a market order. I usually don't ever trade with a market order. It's always done with limit orders. So we just extended the value area high there just a little bit. Again, you're starting to see this being a more normalized distribution. If you zoom out on the TPO chart, all right, look at this normalized distribution. That's pretty clean. And this top is starting to look pretty clean as well, right? This nice slanted edge you got here, that represents a good completed auction. But the market can test up here all at once. All right, not adding a ton of volume up here. And very slow rotations. Could you easily extend the range of this distribution? Yes. There's probably enough volume here where, see, and there you got the pop, right? So you popped up, you filled those limit orders. Now the question is, can you, one, rotate back into this area? And two, if you do rotate back into this area, how many contracts do you add on the rotation? Right? Because getting a sudden pop and a bunch of contracts to fill doesn't mean anything. That just means we've completed the limit orders that were just resting up here. It's on the subsequent rotations up if people come in behind it to hold those places. That's the tell. And right now you're struggling to rotate up there. All right, you're still getting signs of the flashes of the sell side divergence. Right, which means that people are hitting market buys, but we're not clearing out the offers. That's what the divergence is. Right, people are buying, but there's still more offers behind it. You generally want to trade with the divergence behind you, right, at your back. Like, are you adding enough contracts here to extend this distribution higher? Yeah, absolutely. There's enough there. Will you? I don't know. That looked pretty clean. Again, I'd be a seller up here if we didn't have this news release coming out at 10, the ISM manufacturing index. I mean, we're just getting repeated signs of sell divergence here. You get the buyers to step in value, but that's expected. You're going to step in at value. There's a lot of liquidity there. If buyers were stepping in here at the value area high, right, that would probably negate your short. But I haven't seen anything to negate the short thesis just yet, other than that we have a news event. So again, a little more divergence coming in at the swing lows. That's within value, so we're not putting much credence on that information. Slowed rotations up here outside of value. We're still struggling to add the volume up here. This has been a struggle pretty much all the morning session. As we get up here, it's just the volume thins out. You get the initial pop with the limit orders filling, but on the subsequent rotations up, you're just not seeing it. Right? We saw better liquidity builds down here in the 620s than we do up here in the 640s. That's not to say that it just shoots up and finds more liquidity up here in the 650s. It can absolutely do that. But what's the probable outcome right now? The probable outcome is that we go down and visit 620s again, based off this rotation and this volume speed up here, and that repeatedly we have sellers stepping in to absorb these buys up here at the highs. I gotta suspect we're gonna go down here and fill this in. Look how broken this is, right? This is not a completed auction. Look how much smoother this is up here. Much better sign of a completed auction. All right, so we got 5 minutes until ISM manufacturing index. Fingers are coming off the mouse because there's no way we trade now. So we're just going to leave this be. I'm going to use this opportunity for a quick restroom break, and I'll be right back. Drifting back into value. Continuing that hump for liquidity. That's all this market is doing, is just looking for the liquidity. And when it finds it, it stays there. And when it doesn't find it, it moves away. That is the basis of the markets. Facilitate trade and facilitate liquidity. Got the depth of market open on ES and not MES, because that'll be more telling of the liquidity for the market. Still pretty liquid. All right, there's enough on the buy side and the sell side. Bids and offers. All right, but as we approach 10 o'clock, it's going to start to dry up pretty quickly. ISM is not a huge data point, but it's enough of a data point. And since it's the first data point, participants will react to it. Funds will react. Institutions will react. Still trying to find the top of this distribution up here. All right. Ideally, we stay up here through the news event, and this anemia continues up in this area. And because we've got a pretty good distance to the POC right now, that's a pretty good trade, right? Our target, if we were to short anywhere up here, is going to be right here, right in this low volume area, just below value. All right, the market is going to seek to repair that area if it can. That's not a very complete auction. It was very jagged. And it looks like we're just still extending the range to the top side. Again, subsequent rotations are still slow. Don't have a ton of room to work with if we're wanting to take a trade out of value You only have a 5-point range really to work with. But we've got a good distance here to the POC, right? That's more than 2 to 1 on any trade that you take outside of value here. Now, the market is just being persistent and is hanging around here. There's enough liquidity, and there seems to be enough buyers stepping in value to keep this from rotating into the 620s. I don't think they can keep that up. And because we spend so much time towards the top of this distribution, as if we do rotate down, it'll be quick and heavy. All right, because the buyers are stepping in this area, the 630s right in here. Okay, if it rotates down in here, they're all, not only you're going to have the sellers continuing, the people that bought up here who, are late to the longs will also cover their shorts, and then you'll get a faster rotation, a lot of volume added on the way down. All right, so now the volume has died. Volume is dead. All right, everyone has exited. We're down into the teens on both sides of the book. You have 30 seconds until the news release. You want to give this at least a minute or two after the news release for the volatility to die down. So anything that happens right now doesn't mean anything. This is very low liquidity. There's no one on the other side to take these trades. If I come in and just bought 200 contracts right now, yeah, I'm going to shoot price up a little bit. We don't front run news and we don't trade through the news. Maybe these people know something I don't. They could. There's a lot of insider trading these days. So there's the injection of the volatility. Things get a little squirrely for a couple minutes. Once this volatility and volume dies down, we're clear to trade. All right, but we're not just going to jump into a short, because our thesis for this morning has mostly just been to the short side. We see sellers stepping in and diverging contracts with the price. Right, we've seen pretty anemic volume builds out of value on the high side, slowed rotations, but things have now changed because of this news item. This was the first news release of the week. Participants are going to take this information and they're going to trade on it. Right, so you're getting a lot more volume built up here than you were down here. But we've quickly rotated right back down. This was a decent volume up here. Okay, but sellers stepped in hard to push the price back down. Right, if you're long up here at 657, you are absolutely hurting right now. All right, little trap by the sellers. Allow the buyers to get enthusiastic about the news release, drive up the price. You get much better fills up here than you were down here. But we got to let this settle down for a minute. We'll see if the volume normalizes. Right, kind of hoping for like maybe 2,000 to 3,000 contracts per minute to really know that the volatility has died down. Now, I am going to tell you, with having all of this up here, it makes a short a lot less comfortable. Right, I like this little ledge right here that were developed. Right, we stopped here on the 1 minute, stopped up here up to 1 minute. Right, this is maybe a good area to trade from, but you also have the potential for a lot of liquidity above you. Right, so it slightly reduces the probabilities of success on a short. If we rotate up here again and we continue to find no one, much better trade. But you're getting pretty good volume being built here, right? Pretty good rotational speed, right? Volatility has really died down. The book is returning to normal. All right, we'll switch it back over to MES. 235 to 245. Right, you're getting the slowed rotations. Like if we get another sign that sellers are stepping in here and absorbing this on these rises, because you're not getting much volume being built here. You're just not. Right, I'm very tempted to just put the limit order in now at 646. Right, you saw the flash of the divergence. Right, the rotations were very slow here. This absorption happened with minimum volume before the news release. You're getting much faster rotations, but okay, so buyer stepped in within value. Like, we have a good target. Okay, we know that there was some volume being built down here at a pretty good rate this morning. Right, that's what you want to see if you're inclined to be short here. I want a rotation up into 646. Again, just prove to me that there's no one left to do business up here. And then my trade thesis is there's people to do business down here with, right? We'll sell the contracts down there to them so they can buy them. I don't know if we're going to get another rotation up here. This might have been anemic enough. And then we're just going to watch this break down, right? You're getting the flashes of the divergence a little bit. Sellers were willing to follow the price a little bit lower. That's good if you want to be short. I mean, everything about this opening auction today is just telling me you kind of want to be short today, but you got to do it at the right price. You don't chase these things down, right? We might not get our short entry that we were hoping for, right? We're building a lot more volume down here than we were up here, right? That was so close to the news release. We weren't exactly sure, right? If that rotation had happened like 3 minutes later, 100% a short, 100%. Is it 100% guarantee that that trade was going to work? No, but it's 100% guarantee that I was going to take that trade because I had everything that I liked. All right, and now you're just now you're getting to the target where we wanted to be, and that's trading, folks. Like, you can call the move, but unless you trade it, it doesn't mean shit. So we'll see what happens down here. We haven't had many tests here of the lows. All these subsequent tests out up here at the highs, other than this news release jump, we had absolutely slowed rotations. We had signs of seller divergence, volume. It was very hard to add volume up here, and it seems to be much easier down here. Can we possibly entertain a long later in this session? Sure, but we need to see proof of it. Right? I have not yet seen anything that suggests that we should be long in here. If market comes down here, starts to clean this up a little bit, the rotations get slow, we start to add slow volume, we start to see buyers coming in and the absence of sellers, take the long, but we're not there yet. And we're not short in this either. Do not take trades within value and do not take trades towards edges of distributions. That's not where the probabilities are. The probabilities are trading back towards the value. All right, and we don't trade location. We don't just take a trade because we're out of value and we went back into value. You need to see all the other signs: the slowed rotations, the slow volume build, the flashes of divergence, and the lack thereof on the other side. Right, and then when you're out of value and you have all of those things happening, take that trade back towards value because the probabilities are stacked in your favor. All right, this is probability stacking. Right, can we take a long without seeing divergence? Sure can. But if you don't have divergence down here and you have divergence on the sell side, you're trading into a nightmare. Right, and look at these slowed rotations as we're trying to get kind of back into value. Like, you get a little pickup here, right? But the tell is going to be when you get back up in here and this kind of like little broken area within value. Right, if you can't get back over the POC in a meaningful way, like making it above this ledge at 634, you're 100% going to go to 617. The market is just looking for liquidity. It's testing all these areas where it doesn't think the auction is complete, and it's saying, hey, is there anyone left here to do business? And if there's people left to do business, you get the fast rotations and you get the volume build. If there's no one left to conduct any business, the volume just dries up and price moves away. When there's no liquidity, it's very easy to move price. When there's a ton of liquidity, it's very difficult to move price. And institutions and funds that trade in hundreds of millions of dollars do not necessarily want to just trend the market. Right? I don't want to keep on getting worse and worse fills if I'm trending the market up as a buyer. Right? I want to buy a little. Hopefully the sellers come in, reduce my price a little bit. I can get some more contracts bought. Right? So you're struggling to get it back above the POC. And this is very typical with auction thinking, right? We've tested the highs multiple times. We didn't find much. Rotations were slow. The volume was slow. We've come back into value. The rotations picked up, the volume picked up. We've had good rotations down here. Now it tests back up and says, hey, are we sure we're done here around this area? Are we sure? Just to make sure before we like go and run these lows, or is everyone good here? And then once the market says, yeah, we're good here, it's going to run the lows. Is it tradable? No. It's a low probability trade. We want the high probability trades. And distributive thinking, how many A plus setups do you generally get in a day? 2 to 3 tops. There's never more than 3 A plus trades that happen to you. And so when they do happen, you need to be extraordinarily patient waiting for them, but then extraordinarily decisive when they actually come across your radar. You got to jump on it when it happens. Like, is the temptation real as we're seeing all this business done here on the offer and you're not really getting a whole lot for it? Yeah, am I tempted to take short? Sure. I'm always tempted. I'm always tempted to trade. I'm tempted to trade at 6 in the evening, but I don't, because that's not where my edge lies. The crux of this edge is trading back to value from out of value. And then you start stacking the probabilities when you start adding all the other things that we've talked about, the slow rotations, the slow volume builds, the divergence, having good, clean targets where an auction looks like it's incomplete. Just stacking the probabilities, right? And once you trade from out of value back into value, you're already above 50%. But a 50% coin toss edge isn't that great. If I wanted to trade 50% edges, I trade candlesticks. But I seek high probability trades. All right, you're 100% probably going to run these lows. It stinks when you're all over what the market's doing. You're reading the auctions so well, but then you don't get to trade it because it's not really aligning with how you trade the markets. Is it frustrating? Sure, but it's also a great reward at the end of the day, knowing that I followed my trade plan and I was absolutely disciplined. And I only traded when I got what I was looking for. I mean, as of right now, do I think we're going to get back up here? We've tested it so many times, right? We've had at least right at the open. So we had 1, 2, 3, and 4 good swings into that value area high and didn't get anything. And how many times have we swung into these value area lows since the 9:30 open? Twice. And we've gotten a little something each time. Okay. And this is just not, this is so low probability. Anytime you're just banging around the POC and the mean, this is very low probability. Market is just fishing for the last bit of liquidity. And you see how many contracts that we're adding up here? It's not a lot, right? So the market jumps like, okay, are you sure? Is there anyone up here? Is there anyone up here? And so we were talking about this little bit of a broken area within value. See if we would get the rotations pick up. So now we're drifting higher. Let's see if we can get the full drift back outside of value. Do I like this structure out here? No, not really. Right? Because there was volume up here in the 650s. Right? So if we trade at 640s, 646, like ideally, like the trade somewhere in here. I don't think you'll get back up here if the market starts to become anemic here. So you have buyers stepping in within value. Just the anemia is already there. They're buying, but it's just like, baby steps up, baby steps up. When the market struggles to get somewhere, it's a tell. And this has just been a struggle higher, an absolute struggle higher. But we want it out of value. Am I willing to take a trade in value? Sure. But I don't want to see that divergence there. All right, that's enough of a deduction off my trade thesis where I just don't take that trade. So let's see if we can get some rotations outside of value. I don't know if we'll get there. But we got to follow our edge. We got to be disciplined. We got to wait for the auction to give us what it is that we're looking for. And if it doesn't give it, it doesn't give it. And we don't trade. We don't trade for the sake of trading. I'm not going to chase the market. I want my edge to be quantifiable. There's no price patterns here. We're just reading what the auction is telling us. Is price acceptable or is it not acceptable? And it's based off of very large market participants. We do not move the market. There is nothing a group of retail traders can do to this market. We just follow the ride. So it is our job to read what the institutions are doing. All right, so we're trying to rotate up here outside of value. And you're getting signs that the sellers are willing to step in. We also had signs down again at 635, roughly 636, that the buyers were willing to step in there. They didn't hold the divergence, but there was flashes of it that they're present. So we're flipping up. Pretty good volume being added. Pretty good rotations. We're watching very closely to see how many contracts are added per rotation right here, because now we're within an area that we're willing to take trades. So we pay very close attention to how many contracts are being added per rotation. And you're still adding enough here where we're going to probably go a little higher. 370. Yeah, on these upticks, that's primarily what you want to see. Is if we're trying to short on the upticks, you shouldn't be adding a lot of contracts. All right, we got flashes of the divergence. 178, 90, 140 to 160. Still getting enough. All right. Like, we're not trading the location, we're trading the failure of the auction. Right? Once we see signs that the auction is complete up here, we want to take prices away. Again, we've talked about the nervousness of having liquidity above us in the 650s. Like, what's to say the market just doesn't go up there again to make sure that we're really done with business? Like, on these rotations higher, there's still too much volume being built. The rotations are still too fast. Now you got the flash of the buyer divergent outside of value. It's not great. All right, so while we were waiting for markets to drift outside of value, what we're seeing here at the very moment is not enough for us to short this. Does it shoot down on us and just complete the trade before we get in? Sure, that happens. I want to be sure that the probabilities are in our favor. When the market rotates fast and is adding lots of volume up here, it's not a good sign. But we are starting to pick up in the anemia, right? You're starting to see the rotation slow, the volume slow. If we can rotate back up here in the 647s again, and it's slow like it is slow right here, I think we'll take it. But let's be patient and see what it gives us. I don't know if the sellers are going to let it get that high. All right, there was just too much rotation up here, too much volume being added. All right, what we saw down here at 645 was better. Okay, give us the opportunity. I'm not just going to put a limit order at 647 right now. Oh, I'm really tempted to. Like, rotate up. Rotate into this 647 area where we saw the speed up in the rotations. Prove to me that there's no one interested at 647 and I'll take it short. All right, I short here at 43. My stop's essentially going to be at 48. That's not enough margin. At 47, my stop's going to be up at 52. I think that's enough wiggle room. I like operating with a 5-point stop on ES. It's generally enough to take out the volatility. you know, if it drops without us, it drops without us, right? We're not chasing this. It was just this little hiccup here at 647 on these rotations. We had pretty good volume build. It wasn't enough to short. All right. You also didn't really get flashes of the seller divergence either. Is it greater than a 50% trade? Sure. Is it the probability stacked enough for me to take the trade? No. I believe you when I tell you, like, I love to trade. I love to be in trades. Like, I love to read the market and I want to be in trades, but I'm only going to jump in when the market tells me that the probabilities are drastically in my favor. So we're rotating here at the value area high, coming back up to an area that I'm considering. Let's get some rot. Yeah, there we go. 3. It's like every time we come up into the 646, 647, there's enough here that we're just like, oh, like you wait and you wait and you wait for these levels, but then the market isn't doing what you want it to do. All right, I think there's a little more range up here. All right, rotationally, you're getting really kind of slow. We're seeing flashes of divergence, but again, you got to be patient, right? You start seeing these flashes of the rotation speed and the volume being added. You can't jump in front of it. You got to wait for the retest. You got to wait for the volume to dry up in that area, for the auction to tell you it's complete, and then you trade it. All right, this is slow here. Oh, so let's. I mean, I want 48.50, right? 210, 211, 250, 270. You're just like you're so close. You're so close. I just need a little more anemia. Right? On these rotations up, you're getting more than 20 contracts added per rotation. It's not anemic enough. Right? There is a possibility that we shoot up here into the 650s where that liquidity was. All right. And the market, because we only had 1 or 2 rotational passes through here, the market didn't really get the test to see what was left in here. Yeah. I mean, I think you get the juicing. You got to be patient. We're in an area that we like to short, but are we seeing the seller step in here? No. We're seeing too much volume being built, too many rotations. So this is no longer an area that we're interested in shorting. Maybe we'll get up to here in the 657s and we'll watch to see what the rotations do up there. I still think there's plenty of business to be done down here. All right. Like rotationally and with the volume being what it was down there, there's plenty of liquidity. We're just trying to find the top. Where is the top up here? Where do we get to where things just become so anemic that the market can no longer continue in this direction? Are we there yet? No. Like the slowness that we're seeing on the decline here, on the ticks down, you want to see on the tick up. If we're inclined to short, this is definitely not a long, not out of value on the high side. This is not even a consideration, right? Our bias is developed by the auction and where value is relative to price. We don't go into the day being like, oh, we're only shorting or we're only longing. I keep on saying short because that's what the auction is telling me where the opportunity potentially is going to be. Like this is kind of a good spot maybe up here in 652 to take a trade if we get slowed rotations. And you don't want this divergence to hold. Like we've had no significant step in of sellers up here. I don't know if they're trying to get them to drift the price higher. Could be. Yeah, man. Really want to take a trade. Just give me what it is that I'm looking for and I'll take it. Just we don't have the rotational slow down the. I mean, you're just like every time like I'm like getting ready to go put a limit order in, we just see just enough volume just being built, just enough. All right, we want the case to be so overwhelming where my body starts screaming at me like you have to take this trade or you're not playing out your edge. That's when you know it's a great trade. Do all great trades work? No, unfortunately not. I mean, yeah, we just don't have all the pieces. I want to take a trade on less than perfect ideals. I do. But I don't have enough yet. The rotations have not been slow enough towards the high. The volume build has been too high. And we have not seen sellers really stepping in and holding up down the price. We just haven't seen it up here. We saw it earlier this morning before the news release, but after the news release, we didn't see it anymore. All right, and the fact that we keep on rotating up to the same value, 652 and 3/4. That's not great. You know, and if the market plummets without us and goes back down to the 620s and we're not with it, man. It's just the nature of the beast. I would love to take a trade right now. I'm just waiting. Just waiting and waiting and waiting. Like not great volume being added on the downside. Not a ton. But I mean, we're sub 2000, right? This is pretty key right here. This range right here on this 1 minute bar overlaps this range here and was a drastic drop in the amount of contracts transacted over the 1 minute span, right? Once you get less than 2000 contracts traded in any 1 minute, price is not going to stay there. I mean, the auction is done right there. So if price drifts back up here towards 650 and we see anemia, we're going to get short. Even if there is no divergence. Even if we don't see sellers step in, because it's going to be enough evidence to me that there's no business to be done up here. We're done. The market needs to go somewhere else to find liquidity. 15 seconds. All right, divergence at the value area high. That's not ideal. Not trading location, we're trading the outcome of the auction, right? We're in an area that we would like to take a trade, but until the auction tells us that we need to take the trade, we're not taking the trade. This could just be one of those very frustrating days where we just sit in the out of value area where we can take a trade and the market just never gives us what we're looking for. It's not interested in going lower. Buyers just continually step in and drive price up. Like if we're to short this right here, right now, this is going to be a quick resolution trade because the market's either just going to shoot up on you or it's going to shoot down on you. It's not going to stay here. You were flipping too much volume. How does the TPO look? Yeah, the TPO looks like it could fill in around 648. This right here. clean this up a little bit. This looks like a little bit of an awkward drop in the distribution because we've had plenty of volume here at 649 and 3/4. Like, why isn't there volume here? And divergence holding at the value area high. So absent of divergence on the sell side, you don't want to trade into that really. The anemia is getting to be real here. I mean, should we take a stab at 650 and just see? Yeah, see on that rotation up there, how it spooled real quickly. The joys of trading. The joys of trading. And maybe we'll put a limit in at 650 and see if we get filled. Yeah, let's do 650, stop at 655. We'll watch as the market rotates up into 650 if we get it. I mean, the worst, there's enough anemia here now, right? We're getting flashes of the divergence. Will we get filled at 650? I don't know. All right. We'll see. I'll bring up my log, get ready for it. Like, we got the slowed rotations. We've got minimum value being added. We're trading back into value. We're kind of at the edge, right? We've got a good ledge here to trade from. This is good structure. We're outside the value range. We've got a good target. We're not really seeing a ton of opposing absorption. So we got filled. We're in at 650 at 1030. So we're going to put that in 1030. We are short. 665. If we're in drawdown, we don't do anything. Our stop is at 6655. And our take profit is quite a distance away. I'm going to put it at 36. So I will, for now, put in a buy limit at 6636. Again, short at 50. Do we get stopped out? Maybe. Who knows? But 6636. So I'll grade this at 7. We're very close again, stopped out here. All right. When we get stopped, do we re-engage? We'll see. We'll see what the auction gives us. All right. Operating a 5-point stop, got a very good target. All right. We're risking 5 for essentially 14 points. That's a pretty good trade. You don't like to see that divergence stepping up in there. We're not scratching the trade because we're in drawdown, right? When we have a position open, our ability to read this correctly greatly diminishes. So we just let it play out. We get stopped, you get stopped. And then we look for another opportunity. I mean, we're not too pleased that we're getting this divergence here, right? We're very close to getting stopped out. Stops at 655. Let it play out. I mean, there's a chance that we pop up here and find this volume. And we had divergence on the buy side outside of value. Like, that is not great. Very close to being stopped out. We just let it play out. Better that you saw divergence up here. Okay, move our stop. I would say at 43 right here, 43 and a half. If we get 43 and a half on a spool down, I will move my stop to just below entry at 49 and 3/4. We're in at 50. The market is literally at our entry right now. We got within 2 ticks of being stopped essentially. And we'll move our stop to break even. Our target is 36. Okay. It's this breaking the structure here within value, right? It looks like we didn't finish the auction right here. It also doesn't look like we finished the auction here either. Okay. We don't want to see the market being unable to rotate back into value. We also don't want to see buyer divergence here. but we're not moving the stop until we get into this area. I will take 44 probably on the move stop. Ideally 43 and a half. So let's just say definitively 43 and a half, we move the stop in this broken area. Again, buyers stepping in here, unable to get the market back into the value area. Ideally, what you want to see is the market come down and start to rotate very fast and add lots of volumes on the downward rotations. Are you getting that right now? No. You see how you just added one contract on that rotation down? That's not encouraging for our trade. It's really not. But again, unless we get 43 and a half, we're not moving our stop, and our stop remains at 55. You get stopped out, you get stopped out. We do not move anything if we're above our entry. All right, we're always just trying to stack the probabilities in our favor. But the subsequent rotations down, we're not getting a ton of volume. We're not really being able to rotate back within value. It's like, cross your fingers, folks. Cross your fingers on this one. Because as ideal as you think it is, once you get into the trade, I mean, the market can just do whatever it wants, right? We're just along for the ride. We can't impose our will. Just because we're short doesn't mean the market is going to give us what it is that we're looking for. So we're in profit by a few points here, by 2 points. We're in at 650. It stops at 655. Still, we're moving at 43 and a half. So let's just be patient. Wait for the market to do its thing. You get stopped, you get stopped. Depending on what the market does on the rotations down, whether or not how we'll manage this, right? I do have a limit order sitting down at 36, right? It's at 36. Yep. That if the market was just a drop, it'll fill it. But if I start to see the market spooling very fast and adding lots of contracts and rotating very fast on the way down, we'll lift that limit order and we'll trail the stop. But that's based off what the market is doing. Just not able to rotate back into value. Just really not. It's terrible. It's not good for our trade. We're not scratching it. That was encouraging that you did that flip up and quickly retraced it. Like we seem to be having like one good sign, one bad sign, good sign, bad sign, good sign, bad sign. But again, 43 and a half, get ready to move your stop to 49 and 3/4. All right, we want to pay for our transaction costs. Oh, I think the transaction costs are actually more than one tick profit, but not by much. Like if you could get a rotation into value with some pickup in the volume, but you see how on these rotations down, you're just like, it's very hard to add the volume. All right, that's generally not, and all the activities on the bid. It's not what you want to see. Not to say that it can't change in a moment, which it might. I still think there's more liquidity to be found down here than there is up here. And this is the probable trade, right? We're sticking with the probabilities. Give me 43 and a half and we'll move the stop. Do you really want to move the stop right now based off these slowed rotations back into value? Yes, you do. But again, we set the dollar figure at 43 and a half. If we don't get 43 and a half, I'm not moving the stop. If I get stopped out and it got down to 44 and a quarter, so be it. So fucking be it. But I'm leaving my mouse here at 43 and a half. It touches it, I will move the stop. Did it touch it? No. Welcome to trading, folks. It's just like, it's the daily struggle, man. All right, just failing to get below this area. It sucks. Did we get 44? Yeah, you got 44. And we were 2 ticks to our stop. 43 and 3/4. Is it enough? Yeah. I moved the stop because this is the area we knew it was going to test. So I moved my stop to 6649 and 3/4. Okay. So we're protecting our profits. Target still remains 6636. We're just not getting the rotations down. We said we were going to move it at 43 and a half. We got 43 and 3/4. Like, I'm not going to be a dick for a tick. I forgot the guy he wrote Mastering the Trader or something. God, I can't remember his name. If we get stopped out here on our entry, yep, and we're out. It's fine. So make sure you clear out all your orders. All right, so we got out at, that was actually a pretty long trade. That was longer than we really wanted. And then you see the rotations down. I wonder if a news event just spiked. Let's just check our log to make sure we got no slippage. And no slippage, out at 6649 3/4. So 6649 and 3/4 as the market now goes down to your target. You fucking love how that happens. Oh, trading. Was there a news release? Yes, there was. Iran conveys reply to U.S. proposal on end of the war to Pakistan. And that's from the Iranians, I think. Iran rejects a ceasefire in reply to the U.S. via Pakistan. So that's what the market dropped for. So, I mean, that happened, on Thursday or Wednesday of last week? We had just gotten into a trade and some erroneous news item came out. That happens. There's nothing you can do about it, right? We had literally moved the stop one tick early, and the market literally stopped us out to the tick, right? Right there at 664, 2 ticks, 75, 6649, 75. It happens. Good read, good trade, unfortunate news timing, and unfortunate stop timing. Nothing you can do about those two things. All right, and the market's now rotating right around 6635, right where we thought it was going to go. Right, and start to see a little more pickup in the volume and the rotational speed. Shit, maybe we get back outside of value and we try this again. And hopefully we don't get any more Iranian news. It is what it is. We don't dwell on it. We don't get upset about it. The past is the past. Now we look forward towards our next trade. We've broken the cherry for the week. We went break even on our first trade. We were sweating a little bit because the market was just not rotating down back into value. And that's not a good sign, especially when we had buyer divergence stepping in. And then a news item just mid-spooled the market. What are you going to do? Nothing. But we still got time to place another trade if we get the opportunity. I'm comfortable usually generally until like 10:55 placing trades. All right, back up in this other low volume area. And this is what happens within value, right? Because value represents area of liquidity. If there's any areas that really haven't been tested a lot, it's potentially that there's a lot of liquidity there. So the market rotates back into those spots. But so now what we're looking for, again, is the rotations back outside of value. Okay, the slowed rotations, the slow volume build. Hopefully we get signs of divergence on the sell side. Like, we were happy taking the trade up here, right? Somewhere in this area here, despite the divergence on the highs, because there was no divergence on the lows. And we're also outside of value. And maybe one day I'll make a video on how I kind of score my trades, right? Because like I give everything like a total score of a possible 8. Like you'd have 8 points for a trade. That was probably a 7. But I score them generally at the end of the day when I review the videos, just to make sure there wasn't something I was not paying attention to, which happens, right? But I think that was generally a score of 7. Yeah. Oh, Iranians screwed our trade today. Oh, well. What are you going to do? You're rotationally, we're getting slow up here. This is very slow within value. Can we trade within value towards the center of value? You can. Yes, you can. But that's going to take away one of our points of our trade. Okay. And then also the flashes of divergence here right below where we are. That takes away 2 points. Now we don't trade it. If we were within value, like up here, we're rotating very, very slow and we're very, very anemic. and there wasn't flashes of the divergence right here, can you take that trade? Yes, you can. There's enough distance here between where you're entering and where the POC is and where all this brokenness is. There's a lot of brokenness down here. Smoother up here. There seems to be a lot more chop right here. Right. Look at the TPO chart. We were talking about first thing this morning how this was looking like a normalized distribution, that it's Monday. Institutions were going to be a little hesitant until after the first news release, and that you probably were not going to see any crazy sort of trend movement today. And look exactly what has happened. A very normalized distribution, a pretty tight range. Our highs for the cash session are at 660 and the lows are down at 618. That's not a wide range. That's a 40-point range. Right? For the most part, the market is doing exactly what it is that we thought it was going to do today. But it has not provided us with the many great trading opportunities which we hoped for. We've gotten one that was pretty decent. Was it A plus? No, but it was an A. It probably was an A. Do A plus A trades, B plus trades always work? No, they do not. Like, I don't know what the exact probability of an A plus trade is, but maybe 60%. 6 out of 10 times you hit it. And that's a pretty good edge. 60% in financial markets is a pretty good edge. We're getting the flashes of the divergence here, but you also had flashes of divergence on the buy side here within value. Again, you're within value, so you sort of discount the value of that information a little bit. This rotation, we continue to be slow up here, right? After that news release, we kind of added some volume as people were like, okay, take a position real quick. The algorithms react, which a lot of algorithms are set to news releases, right? You see, and they interpret it literally as good news or bad news. Bad news, sell, good news, buy. Not all algorithms interpret the same news the same way. But that's what happens there. Those are the algorithms. And we rotate back down into value. And maybe this is where we spend the rest of our morning trading session back here with value. That's fine. I wish every day was a winning day. I really do. It would make life so much easier, but that's not what we're given every single day. We trade the opportunities that we're given. If they work, they work. They don't, they don't. And we move on. All right, so now we're just waiting for another opportunity, and we'll see if the market gives us patience and discipline. It'll be nice and entertaining to go watch this video later and see that we moved the stop right here, right? We said we were going to move it right here at 43.5. We moved it at 43.75. It came up, stopped us to the tick, essentially 2 ticks, and then went all the way down to your target real quick, right? Like, if there's a part of you that wants to bang your keyboard and throw your mouse up against the wall, that is natural. But what separates the great traders from the piss poor traders is just looking at it as like an emotional reaction to price movements, which is completely natural, and then you need to move past it. If you linger on that for the rest of the day, like, oh, God damn it, I was 1 tick away from hitting like a 3-to-1 trade, and it would have been over so quickly. That leads to a poor trading decision. That leads to FOMO later on, poor analysis, just jumping into trades for the sake of trading. All right, that's not what we do here. We trade objectively. We wait for probabilities to be stacked in our favor, and then we engage. And if the market doesn't give us, and honestly, it being 10:47 right now, we got like 7 to 8 minutes before I'd really consider, the end of the trading session for the morning. Do I think we're going to get anywhere near a spot that I can trade right now? Probably not. Probably not. And this rotationally, this is slow everywhere here. This whole area has been rotationally pretty slow. Not getting a ton of volume being built. We're already sub 2,000 contracts on this range right here. right? Where has the market not really tested very well? The lows. We have not tested these lows very well. We have not rotated down there to find out if the business is concluded. We've rotated up here in the 640s all freaking morning. And there just doesn't seem to be much left here. Right. And when the auction is complete and there's no business to be had, it only takes one participant with not many contracts just to move the market. And then rotationally, we saw that it get slow up here in the 645s, approaching the out of value area. And we talked about whether or not we could take this trade from within value. We had enough distance to the POC, right, to provide good risk to reward ratios. But we saw divergence on the buy side. Is it in value? Sure. But because you don't have any divergence on the sell side, this is still a deterrent. And because you're not out of value, you're not stacking the probabilities that high for yourself. Should you be taking that trade? No. Would it have worked? Sure. Right. But calling a coin flip doesn't make you a genius. And you're getting a little more volume here. We saw some sellers step in and diverge a little bit, take it back down to the mean into the POC. But once you get down towards the POC and the mean, and it just rotates back and forth, just looking for participation, there's nothing. You just cross your arms and you just wait and you just let it go. Like we took our stab this morning and the news item kind of fucked us. And we also, you know what, let's be honest with ourselves. I had literally stated like, I am not moving this until it hits 43 and a half. And then I moved it at 43 and 3/4. Two reasons for that. So one, I never move the stop unless it's outside of 1R, right? If I have a 5-point stop, I need at least a 5-point move for me to even consider moving. Okay, anything within that range, it absolutely does not get moved. Once it gets outside of that, it becomes a little subjective, but you do want to set the level in which you'll move your stop before it happens. Okay, we saw the inability of the market to rotate back into value. You saw the flashes of the divergence on the buy side. Is that justifiable to move our stop one tick? One tick. Yes, I think so. I think so. And when I review the video later and I take a look at it, I'm probably going to come to the same conclusion. It was the right thing to do based off what we were seeing. We could not predict that the news item was going to come in and just shoot the market towards our target. You know, what are you going to do, right? People in Washington can play those moves because they know the news before it happens, but we as retail traders cannot. All right, we're just here looking at the large market participants and trying to gauge what it is that they're doing and then play those moves. And this is just, there's no volume here, right? This is the range that had subsequent less than 2,000 contracts in the 1 minute span. There should not be any more business needed to be done up here. Not in this range at 639. Is it tradable? No. Because you're right on top of the mean, right? Anytime you're towards the mean, you absolutely are not taking trades. There is no trades to be had here. I don't care that sellers are stepping in here at value and holding it below the POC. It does not matter. There's too much volatility around the POC and the mean. All right, trading is a game of probabilities. Probabilities are pretty minimal here around the POC. Just, you got to be patient. All right, and when we're talking about it, there's generally at most at any given 9:30 to 11 a.m. trading session, tops 3 A+ setups. Some days give you 0 A+ setups. Some days don't even give you a B+. Today we were given 1A setup so far, 1A, and we took it. Who knows? Maybe someone watched this video this morning and then didn't move the stop fast enough and got a great trade in. Lucky you. But we don't dwell on it. Just wait for the market to give us another opportunity. Monday is my least favorite day to trade. As the week progresses, my enthusiasm increases because auctions become clearer. People want to make moves, take positions. right? Everyone's like kind of just testing the waters a little bit this week, right? You got a lot of headline risk. It's like, who knows what news is going to come out about Iran? Like, they apparently talked to Pakistan this morning, and that was enough to shoot the market down and then back up. That was enough for the algorithms. Not just rotationally, you're just so slow here. But our read today, it's pretty much spot on. I mean, we read the market very well today. It just didn't translate into very large P&L. But we don't judge our trading day based off the P&L. Do we follow our process? Do we take trades when the opportunity presented itself? Right? Did we stick with the probabilities? Did we stick with auction theory and order flow? Yes, we did. Check those boxes. That makes it a great trading day. A great trading. You should be absolutely grateful and happy any days that you follow your process. Right? It's the days that you don't follow your process, you start breaking rules. That's when things go off the rails. The more days you can trade without breaking your rules, the more successful you will be as a trader. That P&L will come once you become disciplined and follow rules. You also have to have a definable edge. If your edge is not definable, like you haven't forward tested it and tested it live and traded it live, and it's not really an edge. So if you have an edge, right, you have something that stacks the probabilities in your favor, then it's just a matter of discipline after that. It's just following your edge, taking the trades when the edge presents itself, not over trading and not doing stupid stuff. I still make mistakes. I've been at this game for so long and I still make mistakes. And it frustrates me, but each and every day we improve. The frequency of mistakes becomes less and less. The P&L hits become less and less. All right, you're just bouncing around the mean, around the POC right now. It's very expected. All right, we have some broken structure. So the market's just bouncing back a little back and forth. You're getting sellers at the highs, swing highs. You're getting buyers at the swing lows. All right, this is a fairly good agreed upon price. Subsequent, why we call it the mean and the point of control. This is a place where most participants agree that this is a fair price and they're willing to engage the market. They're willing to buy and they're willing to sell. And then the market just chops back and forth. There's nothing to read into this. There's nothing to read right now. Back and forth, back and forth. Sorry about that. So we got 4 minutes left in the trading session. We're really past the time in which I would take a trade anyway. But I'm out of matter of discipline and according to my rules, I sit here until 11 o'clock anyway and just watch the auction. One of the best ways that I improved my trading skills was to decide on certain days ahead of time, no matter what the market did, I was not going to trade it. I was just going to articulate what I was reading in the auction, right? And I would sit here with my arms crossed for an entire hour and a half with no ability to trade. I close the things that allow me to trade and I just read the auctions, right? Get yourself really good at reading auctions and then trade them, right? Build confidence in your auction reads and reading order flow and understand how auctions unfold. And then you can trade them, right? So you saw the shot up, right? The quick shot up. And then we got contracts added. What were those? Those were limit orders that were just resting and sitting there. But as we're getting these subsequent rotations up, are we adding a ton of volume? No, we are not. No, we are not. And that's pretty telling, right? Like you're running out of steam up here a little bit. And structurally, this is probably an area in which you would do it. In low volume areas within value, the default expectation should be quick rotations, lots of volume added, because this is a value area. There's lots of liquidity here. This is poor structure. There should be liquidity here. If you rotate up into these areas and you don't find those quick rotations, you don't find that liquidity, the market subsequently will rotate down, rotate away from that to a place where it thinks it does find liquidity. Not to say it might not just shoot right through here, right, and go back up here and try to find the liquidity up here. Right, this has been a nuisance all morning, right? This rotation up on the 10 o'clock news release that we added some quick volume, but never were able to rotate into that area again. That happens. It's always on the subsequent rotations that you find out the most information. It's not the initial rotations, the subsequent ones. And see, and those rotations up, you're just like, hello. You went from 107 to 128. Now you went from 128 to, see, you got a little more juice there. But like the default expectation for the market should be lots of volume, lots of volume, lots of volume, lots of volume. It shouldn't be these slow, anemic ticks up and ticks down where it's just not finding anything. The market is going to naturally gravitate based on participation to areas where it finds greater volume. Right? And you're just not really finding it up here and on top of the value range. You're just not really. Is it tradable? No. You're in value. That doesn't negate it. What negates it is that you are in value and also have divergence on the bid. Right? So that's 2 strikes against you. 2 strikes, you don't take it. I mean, I use the analogy of baseball, and 2 strikes, you're probably swinging on something that's close, but not in trading. Right? We want the fat pitches right up the middle. 0 count, no balls, no strikes, fat pitch up the middle, and we swing. Right? We have the luxury. We can wait pitch after pitch after pitch after pitch. And the market is rotating back down. It's trying to find the liquidity. It's not finding it on these rotations up. Looking at the TPO chart and the overall picture of the distribution, much cleaner on the high side than you are on the low side. I still think you visit the lows today. Might not get there. I don't know. All right, but it is 11 o'clock, so that will conclude this morning's stream. We took one good shot, right? We moved our stop right before a random news release came out and stopped us to a tick, just one. Well, I keep on saying one tick. It got to 650 and our stop was at 649 3/4. So we got stopped out by 1 tick. All right, we protected our profits, but the erroneous news item killed the trade. Oh, well. All right, better luck tomorrow. Tomorrow we'll continue to read the auction, hopefully as well as we did today. And we'll see what develops. All right, I hope you all have a great day, the rest of your Monday. I will see everyone bright and early, 9:30 on Tuesday. All right, everyone.